Welcome to today's financial news update from quantbyte.io. Live cattle futures rebounded from early session weakness, closing $2 to $3.45 higher due to strong cash prices. The October contract gained $7.45 last week. Open interest declined by 2,774 contracts. Lean hog futures closed weakly on Friday, with October contracts down $1.975 from the previous week's close. Open interest in hog futures also declined, decreasing by 2,687 contracts due to long position liquidation. Meanwhile, the USDA reported a slight increase in national base hog prices, up 7 cents from the previous day. Cotton price has increased by 10 to 17 points. However, futures contracts experienced losses previously, dropping by 60 to 77 cents in nearby contracts and decreasing by 146 points last week for December contracts. Soybean prices declined due to increased trade tensions, resulting in a loss of 14 to 16 cents per unit and a November price drop of 11.25 cents for the week. The national average cash bean price decreased by 15.75 cents to $9.31. Soy meal futures also fell, dropping $1.60 to $2.30. The wheat market experienced a decline across three markets, influenced by pressure from other commodities. Soft red wheat futures fell by 8 to 9 cents, while Kansas City hard red winter, HRW, futures dropped 6 cents in value. Lean hog futures declined on Friday, with most contracts ending in the red by as much as 40 cents. October's contract fell $1.975 for the week. Meanwhile, the USDA's national base hog price increased by 7 cents to $96.40. Live cattle futures rebounded from early weakness, closing $2 to $3.45 higher due to strong cash market activity. The October contract gained $7.45 this week and remains without delivery for a second consecutive Friday, indicating ongoing support in the market. Cotton futures declined significantly, losing between 60 to 77 cents in nearbys. December contracts dropped by 146 points for the week. The US dollar index fell to $98.620, while crude oil prices dropped below $60 a barrel, decreasing by $3.31 per barrel. U.S. stock markets experienced a decline, with the S&P 500 falling 2.71%, the Dow Jones Industrials dropping 1.9%, and the Nasdaq 100 plunging 3.49%. December futures contracts also saw significant losses, with the E-mini S&P futures falling 2.61%. The U.S. dollar index fell by 0.58% due to a decline in Treasury note yields following comments from Fed officials supporting additional interest rate cuts. This led to accelerating losses in the dollar's value. Crude oil and gasoline prices experienced sharp declines last week, with WTI crude oil plummeting 4.24% to its lowest level in 5 months and RBOB gasoline falling 3.30% to a 4.5-year low. Coffee prices have surged due to drought concerns in Brazil's main growing regions. The price of December Arabica coffee rose by plus 2.91% and November Robusta coffee increased by plus 2.59%. Severe dry conditions are reported in key areas such as Minas Gerais, where the drought is affecting coffee yields. Crude oil prices have surged, rising 1.63% for November WTI crude oil and 1.6% for November RBOB gasoline. The gains follow signals from the U.S. administration that it is open to reaching a trade deal with China, which helped recover some of last week's losses. The U.S. dollar index has risen by 0.32% due to easing trade tensions between the U.S. and China. This development has reduced pressure on the dollar, as investors seek higher-risk assets in response to improved market sentiment. The U.S. stock markets experienced a positive close, with the S&P 500 rising by 1.22%, the Dow Jones Industrials increasing by 0.91%, and the Nasdaq 100 surging by 1.67%. This marked a strong day for the indices, with futures contracts also reflecting these gains. Stay informed with quantbyte.io for the latest financial news.